Hey, good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great weekend and we got some Thanksgiving holidays coming up. But before I get right into it, I'm gonna do a quick dad joke and tell you guys what's going on in the markets in the last week and what we're looking forward in next coming weeks. So before I getting right into it, dad joke is why did Thanos go to the urologist? Why did Thanos go to the urologist? It's because he found out he had a kidney stone. Get it? Get it? Kidney stone? Pew, pew. All right. So getting right into it. Last week we got the unemployment rate report. Now we didn't get all of the jobs reports. We didn't get JOLTS. We didn't get business surveys. There's a number of things that were kind of missing from the October report as well as from the September report. But the main thing we got last week was the unemployment rate. Now, the unemployment rate going from August, September. Now, keep in mind the report that we got releases in the beginning of October to tell us what happened between August and September. So I want you guys to keep that in mind. So we're still delayed. We're still missing October, and we're still missing from what happened from September to October and October to November. So we're still kind of missing some reports there. But I want to be very clear: is this is the report that we needed to see. Now, from August to September, the unemployment rate went from 4.3 to 4.4%. Is this what you can see in the chart? So it's gone up per 0.1% since June. Now, another thing to note is that this is a rounded number, which means that the actual number for the unemployment rate going from August to September, really just what it did in September, was that actually was 4.44%, which means if it was 4.45, it would have been reported as 4.5% instead of 4.4. So we were real close to seeing unemployment rate go up by 0.2%, which is a big number, which is a big change. So the unemployment rate is going up. Now, had this been the only thing, we would have seen a big improvement in rates. Now, the other thing that kind of counteracted the news of the unemployment rate is the amount of change of U.S. employment. The amount of jobs that were expected to fill, or new jobs that were expected to fill, was about 50,000 jobs. So an increase of 50,000 jobs. What actually happened was there was an increase of 119 jobs. So it more than doubled. So these two news, the unemployment rate going up and the release of how many jobs were filled, actually kind of counteracted each other. But what was nice is that we still saw a very small improvement. We just didn't see the improvement we would have liked. So that's the good news going into the September report. So because of everything that happened in October, it hasn't been reported yet. We should see the unemployment rate go up, and maybe the expectation of the monthly change in U.S. employment should potentially go down because all the furloughs, the layoffs, even Amazon had layoffs, so on and so forth. Now, what we're looking at for the report for October will most likely the report that's supposed to tell us what happened in October is going to be released in December 16th. So we're going to get that, and then possibly what happened in November. At least the unemployment data is probably going to be released about a week after that, just so they can get caught up. So right now, everything is pointing toward the direction of seeing the labor market weakening. Okay, there's obviously, and what further reinforces that, the amount of people that are still continuing to file for unemployment claims is still 1.974 million people. So we're almost at 2 million people, depending on how these next reports go. So, and the thing is, how this is going to impact our economy is that this is going to determine how the Fed is going to react in regards to what they'll do in the December 10th meeting on the Fed rate. So about 2 weeks ago and before then, with the shutdown and the delayed and economic data, they were not going to plan on lowering the Fed funds rate in December at all. If anything, they had a 30% chance. Now, because there's all other reports that kind of give us an idea of how the labor market is doing, it really just says the labor market's really weak. They're now considering lowering the Fed funds rate in December, like cutting those rates by 1/4% at least. So we might, and now it's a 70% chance instead of 30. So that's really important detail to know. We might be seeing that around December 10th timeframe moving forward. Now, in regards to how rates have trended, for the most part, since beginning mid-November, we saw the peak in the cycle. Now we're seeing mortgage rates starting to come down a little bit, which is nice, which is a really good thing. So we're expecting those numbers. Let me get rid of this folder screen. I don't know why this is up. But basically, this is the trend in mortgage rates in the last, since June. And as I mentioned before, every time we've had the announcement of the unemployment rate, mortgage rates have come down. So you can kind of see all those markers is that those those moments where the rates have come down by a decent amount. In August here, that was the unemployment rate. Same thing here in September. We didn't get one for October. Really, this was right here is where we got the release of the information for September, for the month of September. As I mentioned before, that information, counteracted with each other, but for the most part, it didn't make rates worse. That's the good thing. So if anything, it improved slightly, made a small improvement in mortgage rates, and we saw better improvements on Fridays and even today. So rates are coming back down. I think we have more improvements in rates in the next coming weeks. Really, in the next 3 or 4 weeks, we're gonna see rates come down potentially better, depending on how this labor market news comes out. So I think what's going to be a big day over the next coming weeks is December 16th is the release of the October data and how the unemployment rate is going to look. I think that's going to be a big report only because, again, the government shutdown was almost the entire month of the October. Government shutdown happened around October 5th. So pretty much the entire month, people got furloughed, people got laid off from Amazon, at least in Seattle, the Amazon in Seattle. I don't know how it applies to all the other sites for Amazon, but if Amazon's willing to, lay off about 12,000 people in Seattle, I would imagine they may have done something similar all across their facilities all around the country. So that's something to consider as we're going into this phase of economic development. Again, the main thing that's really causing rates to be the way to react the way they are right now has to do with the unemployment rate. So really that report weighs the heaviest on mortgage rates, depending on how it goes. So but otherwise, that's pretty much all I got for you guys today. There's not a whole lot this week. So, I mean, we do get an inflation report tomorrow that we're expecting, but for the most part, or this Friday, we're going to get the last inflation report for the month of November. However, right now, again, the Fed is really not. They do care about it, but it weighs less than the unemployment rate. So right now, I guess over the next month, we will most likely see. My forecast is that we will see the unemployment rate go up to 4.5% pretty easily because the actual number is at 4.44. So it needs to only jump up by 0.01% to be considered 4.5. We most likely see a lot of job cuts because of the government shutdown and the amount of people got laid off. And December 16th is going to be that big report that tells us that. And we'll most likely see a Fed cut, maybe by 1/4%. To maybe 3.5-ish, somewhere around there, 3.6-ish. We might see Fed cut down to that. Overall, it's not going to have a huge impact on rates just because it's not a direct correlation. It does affect the economy, which influences rates, but sometimes we can't really predict how mortgage rates are going to react based on the context of the economy. Otherwise, that's really all I got for you guys today. Hope you guys gained a lot of information and what you guys can probably do in the future. Otherwise, that's all I got. Nuke out.